Hey guys, it's your boy Symphony Israel again. Today is Wednesday, trying to explain this trade. How there's a trade I took on S&P 500. I hit my stop loss. Let's go to S&P 500. I took one trade yesterday and it was a stop loss trade. Remember, I'm trying to fix my psychology and I'm trying to take only one setup and then try to see what's gonna happen from there. So what happened yesterday was that yesterday we have this fair value gap. What's it called? This fair value gap SMT. Nasdaq is tapping into this fair value gap, but S&P 500 is not tapping into this fair value gap on the 15 minutes time frame. But I wasn't looking at Nasdaq. Understand? I was looking at S&P 500. And why am I looking for a sell? It was because of I already see the sell. I already see that okay, market has break structure on the 5 minutes time frame right here. Let me put it there for you guys. I already see this break of structure on the 5 minutes time frame. So I was kind of like thinking that okay, the market is ready to sell, not knowing the market is not even ready to sell. Understand? So what happened is after I spot this break of structure on the 5 minutes time frame, and then I just draw my equilibrium immediately because the only thing I need is a break of structure to form a swing high and a swing low, or a swing low and a swing high. Once I see that I was ready to sell, I was saying myself that okay, now we're gonna sell to my overall buying position, which is this discount zone of the overall buy. Understand? So not knowing that Nasdaq can tap into the fair value gap, understand that what happened, and then I saw this SMT on the 1 minute time frame. I'm coming. On the 1 minute time frame, we found an SMT, which was something I never believed is gonna happen. Let me show you guys. So this is it, and I entered this trade perfectly. I wait for my setup, everything. So the first thing we had is that market tap into the equilibrium zone. Let me use arrow so you guys can get what I'm saying. So now, market tap into the equilibrium zone, give me a very good inversion. I did not take the trade because I understand that I need SMT. Give me another inversion again without SMT. I did not take the trade. I understand that I need SMT. And then in this stage, I have an SMT and I have an inversion. That was my setup. I took the trade straight away, and then the market did what? Market end up hitting my stop, which is normal thing. I follow my plan and everything, and I end up hitting stop loss. If I see this another time, I'm going to take it. But the only thing I will not do is that I'll make sure I'm checking the higher time frame. That's the only mistake I made. Why do I take this trade yesterday? Because I was seeing enough liquidity right here. I was seeing enough liquidity right here. So I'm telling myself that yesterday that okay, market is likely going to come to this liquidity, this liquidity, this liquidity. So I have this, this trend line liquidity down here for the market to come and target, and I have this my final target in this fair value gap. I was targeting the fair value gap, not knowing that the fair value gap is already tapped in on Nasdaq. Understand that what happened to me yesterday is a mistake. Nobody can avoid a mistake like this. I'm just gonna make sure um I don't get into this trap again. So now on our Gold Funded Trader account, we are down $105, which is 2 point something percent. We are down 2 point something percent. I don't know how we're gonna make this back, but I know that one trade alone is gonna make me back this money. And if possible, I'm gonna pass this account. So you guys have seen this is transparency. You guys have seen everything. There's nothing to hide. So I hope you guys can see. So let's go. Today is Wednesday. We're gonna try to trade today. I don't have my buyers yet until 3 p.m. Nigerian time, which is 10 a.m. New York time. That's when I'm gonna start trading. So peace out.